We welcome our viewers to the April edition of Monthly Fixed Income Outlook. We have with us our fund manager, Mr. Kaustubh Gupta. Welcome, Kaustubh.
Thank you, Mida.
Kaustubh, in the recent policy announcement, there has been a 25 basis point rate cut, repo rate cut, and the policy stance continues to be neutral. What is your take on the monetary policy?
So RBI has cut rate by 25 basis point, or rather another 25 basis point in April of 2019. Thus cumulative, it's a back-to-back 25 basis point rate cut and a total of 50 basis point of rate cut since January of 2019. Along with the rate cut, they have maintained their neutral stance, although they have revised their inflation projection for next financial year by 20 to 30 basis point for both first half and second half, and they have revised their growth estimate for FY20 by 20 basis point to 7.2 from 7.4. But at the same time, they have highlighted that there are some risks emerging to inflation on account of low fuel prices. Given that the crude have already rallied by 30% in this financial year, the second risk that they have highlighted is potential abrupt increase in vegetable prices as country is facing possibility of El Nino, which may lead to suboptimal monsoon conditions. The third risk is on account of fiscal, which given that we are into political season, there are possibility that the whichever government may be formed in next 2 months, at the inception there could be possibility of some fiscal slippage. So in all these, because of these conditions, although there is a revision in data both on growth and inflation on the downside, but RBI has acted with some prudence, and they have looked through this low inflation number, and they are awaiting further clarity to make sure whether the next move should be a rate hike, cut or neutral, and that's the reason they have kept their stance at neutral level.
So Kaustubh, with 2 rate cuts already behind us, consecutive one after the other, what is your view on the interest rate trajectory going forward? Is there a possibility that there will be a pause for a while?
So before this policy, market was anticipating that not only we will have one rate cut, but also a lot more dovish statements from RBI. Given that RBI post-policy press call and discussion with analysts was lot more neutral, I would say that the probability of June rate cut is very remote now. Having said that, as we have clarity on how the crude prices moves over next 2 months, as we have more clarity on elevated core inflation, whether it comes off or not, we need furthermore clarity on in which direction that the global growth and local growth they are moving, because of late most of the high frequency indicators they are pointing to a substantial slowdown, and some clarity on likely monsoon and its impact on the food inflation will decide whether we'll have a rate cut in June. Having said that, I'll say the base case is that next easing, if the growth at local level slips more than what RBI is anticipating, we could see in policy after June, which is in August.
So Kaustubh, how have the bond markets reacted to this policy, and in such a scenario, what would you advise our investors to do?
As we just discussed, that the investors in bond market, they were expecting not only 25 basis of rate cut, but also dovish stance or some clarity on future rate cut path. Given that the RBI has kept its post-policy commentary quite neutral, that expectation has been, I would say, they have been readjusted, and as of now markets are not anticipating any further rate cuts for now. Because of which yield curve across the curves, they have hardened by about 15 to 20 basis points. We think, given that the inflation which continues to be at lower level and growth which remains to be fragile, these hardening in the yields, they are buying opportunities for investors for now, and that's why I would suggest investors to stick to the shorter end of the curve, as not only they provide reasonable accrual, but in case we have more clarity on the risk points, there is a possibility of rate cut 3 months to 6 months down the line. Thus, I would suggest investors to invest on the shorter end of the curve in the funds which do invest in 3 months to 3 year space.
Thank you, Kaustubh, for sharing your views, and we thank our viewers for hearing us. Happy investing.
Thank you, investors.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.